All right. Hi, guys. Welcome to the Hidden Monkey Daily Update. Sorry, I've been out the last few days. I've been not feeling too good. So, been fighting this nagging fever and it finally broke, I think. So, I wanted to catch up even though market's been pretty boring. I mean, it's been up, so kind of boring. Same old. But let me show you what's going on. Um, Excuse me, I'm still a little sick. So, I'll do a little recap. As you know, I had, I had two positions that had a weekly expirations, meaning they expired on Friday, and that was a vertical put spread. I had a 190 vertical put spread and also 185 vertical put spread that expired um, on Friday. So they expired worthless. What that means is I collected the full amount of premium and I didn't buy it back. I just let it expire worthless to the guy, whoever I sold it to. So I sold it. I collected all the money from him. I didn't buy it back. So it expired worthless to him because, of course, the SPY finished above 190 at 201.66, as you can see here. So that's fine. Now as far as my other positions, though, if you look, I'll kind of show you. Yeah, see, here's all my other positions. So now, of course, I'm in the money now because I have a couple of calls that these all expire at the end of November. So these, see, I have a call here, a call here. See these flags right here in the dot? See, it's a call. I sold a call here. I sold a call here. I sold a car here. So these three, and the lowest one is 197. So what I need is I need the SPY to be below 197, okay, by the time November 22nd expiration comes around. All right. So the reason why I haven't rolled them yet is because I didn't adjust them per carry. I think the market will turn back down again. We're right about where it turned down the last time. And if I want to see how 197 is, I'll go over here, go to your trade page, go to SPY, go to the November. Where is it? November. Where am I? Yep, here, 20 days. And then you look for the call side, right? Where's the call? Here's the calls right there. And you look for 197. So I'm going to scroll down and I'm looking for the 197 strike. Here it is. Okay. Now so what I want to know is what are the chances of the SPY being below 197? Scroll down, scroll to the left. Okay, the bid is selling for $5.56. And right now the probability out of money, it only, according to this, I only have a 197. If I sell this, I only have a 27.21% chance of it finishing out of the money. I only have a 27% chance of being right. I have if I sell the put here, I have a 70, wait, where is it? If I'm betting that in 20 days it'll be above 197, I have a 73% chance of being right. So if the market goes up, I'll have to roll these again, but I'm gonna check it out. I'll start concentrating on these now because I have 20 days left. I usually start rolling stuff around 10 days because I want to see, what happens. Remember now, the market was below 185 when I rolled these other ones. I had a 195 position on and I rolled it down to 190. Oh no, I'm sorry, 192 position on and I rolled it down to 190. And that was when the market was down here, I think. It got all the way down to, yeah, here. And of course, it recovered nicely. So anyway, here's where we are. Here's that green. See that green arrow right there? That's when the 13-day moving average crossed above the 21-day moving average. I told you that's a real bullish sign usually. But then I think in my last video, I also talked about how at the time, this wasn't green, okay? And so it went bullish here. This was the slow stochastic cross was all the way up here. This was still red, see? And now it turned green. So that was kind of a weak sign for me. And of course, so I think if this ADX comes across too, you'll see the market dip anyway. But I'm still studying this ADX. I just started playing with that, so I'm not too positive. So I don't want to confuse you guys. So I'm going to clear that chart right now. This yellow line right here, the solid, is where the market opened January 1st, or the first trading day of January. I still think they'll start to stay above this, but the high was 201.90 back on 9/19. Okay, and after that high from there, look where the market was. Look what it looked like. Okay, the VIX was down. Let me see. The IV rank was down to 16.49, I think, when it hit. Oh no, I'm sorry. Yeah, roughly around here. Okay, so right now the is around 15.46 at the high. It's not quite there yet, right? It's still up. It's still IB rank is still above 29, which is interesting to me. Um, and of course, look where it was here. Okay, so here's where we are. All right. So could this go further? Oh yeah, because man, if this shoots high above here, we could see this rocket. Okay, but my expiration date is here, so I may have to adjust stuff, but we'll see. Okay. Um, let me scroll out. Let me zoom out a little bit. As you can see, this is red yellow, which means it's in between 25 and 50. Okay. Um, I don't know. I have no crystal ball. I could be hella wrong, but I don't know. It just in my head, I was just somehow thinking, that's why I sold those positions. That's why I sold those Hono Hono trades as well. As if you recall over here in Dole, I'll show you my positions because I try to be totally transparent. I did a Hono Hono trade, which is a synthetic straddle in actually I have one on SPY too, I think. VIX, SPY, and FXE. The VXX, I have a straddle, meaning a Hono Hono trade, meaning I'm betting that the VIX will stay around where I sold it. Try look. I'm betting it'll stay here. This is a call, so I'm betting it'll stay below $34, which it is, and I also sold a put of 31, so I'm betting it'll be above $31, which it's not. Right? That's why it's in the money. But you know what I mean? I sold it for like $2.97, so I'm still okay there. That's why if you look over here, I have a 22. I'm at 22.2% of max profit. My FXE is the same thing, right? I'm betting it'll stay below 125, which it is. I'm also betting it'll stay above 124, which it's not. But because I sold so much premium and I collected so much money for it, I'm still up money. Whoops. See that? Now in the SPY, as you can see, I think I sort of strategy look for strikes close together. 197, 167, 184, 209. That ain't it. 181, 206. That ain't it. I thought I did one. Here's a put spread. I'm betting it'll be above 179. Here, right here. So what I need is I need this sucker to drop down to about 189. Why? Because look, I have a Hono Hono trade I placed. I forgot when I gotta look this up. But I've got 20 days left to go. Look what I did. I sold the 188 put and I sold the 189 call. So I'm betting it was going to be below 189 and above 188 in the SPY. I'm way off, as you can tell, right? And of course that's why I'm losing. So I'm losing $100. But this is a defined risk trade. So I think the most I forgot, but I couldn't lose that much. So it was more like just a play trade, and I think I announced that too on the recording. I gotta look that up, but it's there if you look at the history. It's no big deal. But anyway, I was testing, that the straddles theory they had. So anyway, let's look at what's going on in the ES. So / this is a E-mini spoos here, E-mini spoos SP 500. They're not gonna open again until tomorrow. But let's see what happened. Okay, this is 30th. Then there was Halloween. Okay, and then nothing after that. So it got as high. It hit the high all year. Look, 2016.75. Let me reverse. Yep, we hit all-time highs in the spoos or the E-mini futures. Let's see the SPX, which is what Karen trades. Okay, no, we haven't hit all times high yet. The high is 219.26. We're right there though. So, that doesn't have. I don't know why that doesn't have. Let me go back to the SPY real quick. So I don't know where. I mean, your guess is as good as mine. I'm just gonna manage my positions, and I just wish I could put on more positions, which I can't in the SPY anyway because IB rank is so low. Okay, so but it's above. Well, no, it's below 35. Sorry, but you got to put somewhere on here. See how it spiked up there that one day? IB rank spiked up right here, almost touched 50. You could have sold. You could have sold golden geckos there, and you still would have made money. See that? So now I'm like, there's really nothing I can do with this, and I try to like to stay in one ETS because that was the point of this whole project. And I usually got in trouble by screwing around betting other stuff. Like, I lost a lot of money fooling around with Tesla because I couldn't do anything in the SPY because IB rank was always low. And at the time, I screwed around with Tesla the market measure, the study was not about IV rank above 35, so I wasn't really doing anything in SPY. But take a look, Tesla has earnings on the 5th. You know what I mean? And look at how high IV rank. Well, it was higher, of course, but now it's only at 50. And if you're bullish on Tesla, you could do directional by selling a put spread, or you could do a straddle, betting it'll stay the same, which is dangerous with Tesla. Look, you would have to rolled it 1 month, 2 months. You have to wait 2-3 months, and you would have got your money back. But you'd have to roll it like a couple billion times, and a couple times. So over here, as you can see, it's green just for fun. Tesla, it's green in the unbalanced volume, which means more buying is going in. So it's up to you, but it's not one I'd recommend if you don't have a lot of money to play with. I'll stick to SP. Oh, well, I'm sorry. You can stick to more guarantee stuff like go to Dole, go to your grid page, go to your see right here. I'm on notables. I put on my filter here. I'm hiding earnings and I'm doing this right, and I'm sorting by descending order and volatility. So gold is at 100. See, all these commodities are at 100. Okay, so okay. So you can do all of these. Cisco, same old, same old. I'll do one on gold, 100% IV rank. Jeez, what does GLD look like? GDX, I mean. I might do this. Gold. Oh, yeah, look at that. Hold on, why does it look like that? Go to tools. Go to price. Click fit studies. Okay, fit studies, fit alerts, fit. Let me try that. That should work. Yeah, there we go. Anyway, look, 1689 all-time low. IV rank at 100. You know, you could easily do a golden gecko on this one, be non-directional, or you can skew it any you want. Let's look how much we can. Oh, you know what? I doubt it. You know why? Because we can't collect any money. It's such a cheap stock, right? Go to choose strategies. Go to strangle. Right? Click on gold. Yeah, we're gonna click 48 cents. There's not too much you can do in that. Let's go something more expensive. FXC. We already covered FXC. Well, you can try GLD. I already did FXC on a previous trade, so you can look that up maybe in the past videos. Let's do gold real quick, so we can walk it through. Yeah, look, 111. Okay, let's go to gold. Double click on GLD. Right here, go to strategies. Come on, load. I've got a couple minutes left here. Let's go to strategies real quick. Go to strangle. Let's see how much we can collect. We can collect $1.42. Let's find out what the expected move in GLD is. Go to Thinkorswim, type in GLD, which is there. Go to trade page. What expiration date are we looking for? Let's go back to Doe. No. See, look, quarterly. We don't want this. See, perfect. So good thing we checked, right? We just want a normal expiration. So, okay, so what I got to do is, how many more? 60 days, too far. So what I'm doing is I'm going to expiration right here, and I'm going to reduce it to that Q. Oh, there we go. See, that Q went away. So that's how I know this is a normal expiration. 48 days, perfect. Okay, so December 20th, 48 days expiration. Go back to Thinkorswim. Go to, I'm looking for December. Here it is, right? 48 days expiration. I'm going to expand this, go across, and see the expected move is $6.88. I'll go to my online calculator, type in $6.88, multiply that by 0.198, and I come out with $1.36 is 19.8% of the expected move. Can I collect that? Not quite, but close enough, right? I'll be like, all right. So there's two things you could do. You could do a golden gecko or a hono trade. So being that this is a golden gecko forum, let's just try that. So we're pretty much close enough there. So we want to click at least $1.36. You can do one of two things now. You can either bring in your strikes, okay, betting that there won't be a, you can bring in your strikes so you can collect this more. Like I could bring in this right here and move it right closer. See right there, $1.20. So you can memorize the strikes, so 104, 121, and that gets you pretty much close, right? But this is a naked strangle, undefined risk, right? So we're doing golden geckos. So remember the put is 104 put, 121 call. Okay? Go to strategies. Wait, 104, 121. See, I already forgot. Now go to Iron Condor. Same thing. Click on go. Change the expiration date because